Hey guys, are you interested in Amazon earnings? Wondering about how good they are or what to expect from the upcoming earnings report? You probably are if you're watching this video, and I'm here to tell you the most interesting facts about Amazon earnings that you can use straight away. So keep watching and also subscribe to my channel if you are not subscribed yet, because in my future videos I would show some more stocks overview of the hottest stocks on the market for now. So keep watching. Over the years, Amazon expanded tremendously, from just a marketplace with literature into a company that offers almost everything, starting from the access cloud computing and ending by grocery stores, with Jeff Bezos becoming both CEO of the company and one of the richest person in the world. For most of its existence, Amazon rarely shows earnings worth mentioning. But what can you expect from the upcoming earnings report? Well, no one can really tell you when they believe that Amazon will capitalize on the massive market presence to drive the incredible profits everyone expects. Mostly, they simply believe in the company's overall story and think that the past performance of the company will predict the future. A look at their consensus forecast of 2.49 can be a little bit misleading, since their high end at 3.09 and their low end at 1.53. Wide enough to fly a jet plane through. This makes some analysts believe that the company will acquire more businesses. Others believe that they'll push down their cost per unit and that the mix of revenues will be markedly changed. Analysts covering Amazon won't change their opinion until after Amazon publish their earnings. So knowing this fact, you can do your own homework and pick up on any necessary updates long before the analysts will publish their opinions. Still, it's worth looking at interesting insights and opinions that can give you fresh ideas and perspectives. Amazon remains unpredictable. The company regularly swings between profits and losses. Also, since the company invests into almost everything, starting from drone technology and ending by expansion of its logistic arm, it's not a surprise that it has a lot of additional revenue and income streams. Recently, the company announced a venture by which individuals can become Amazon delivery businesses, complete with branding and training. What remains unknown is whether this simple venture will enable another aspect of Amazon's overall business or become a profit stream by itself. Amazon tries to dominate in every sphere possible. Talking about Amazon Prime, the company has made massive strides into media delivery. Similar to Netflix, the company always looking for new media, accepting a failure as a mean for finding something that works with their customers. Recent reports suggest that the company has its eye on CVS and Walgreens as a way of entering healthcare space. Amazon 4A puts it together with JP Morgan and Berkshire as a way to create a healthcare company that is free from making profit incentives and constraints. I also want to cover Amazon's home technology. Amazon's Alexa brought the company into direct competition with Apple, Microsoft, and other companies which are into Internet of Things. Their artificial intelligence technology coupled with opening programming system allow the developers to create customized applications for their models. Now, Alexa can control everything in your house, starting from your Nest temperature switch to a Philips lighting. I decided to review the backtest of Amazon's earnings per share ratio and price to earnings ratio relative to other companies in their sector in order to determine whether these metrics can provide a better returns than just simple buy and hold strategy. Turns out that since Amazon did not produce earnings for much of its lifetime, looking at their earnings did not provide any good returns when backtested. Most of the analysts point to Amazon's revenue when it comes to better analyzing the business, but after the sales quarter-to-quarter comparison, it provides the reasonable metric for doing as well as buy and hold. Yet, when you try to incorporate the transaction cost into the mix, the strategy isn't worth pursuing. Along with Nasdaq, Amazon share prices hit the record territory, putting new highs nearly every day. With such a remarkable run, Amazon is potentially placed for failure. Leading into the company's earnings, we can get a clue into overall sentiment by watching a lot of competitors. For example, stocks like Netflix and Google can provide a better understanding of how these companies will be treated at their earnings announcements. You can't compare Amazon company to other companies both in the business world and in the stock market. Investors bet each and every day that the company will dominate whatever industry it enters. As the company grows at an amazing pace, the company's prices grow with them. The company is widely owned by institutional and retail investors. With consumers picking up their packages at their doorstep almost every day, the company continues to innovate in the way it delivers to current customers as well as expanding their business scope. From 2010 to 2014, investors wondered whether the company got ahead of itself and was maintaining a sustainable business that would endure. Yet, those who stayed with the company were well rewarded. So investing in this company requires a lot of attention. That's all for today, guys. Thank you so much for watching. You can check my previous video where I compare some stocks just right here. Also, subscribe because that really motivates me to provide a better content for you. If you like this video, put this video a big thumb up. Visit stockmetrics.net in order to see the blog post, and I will leave it in the description box down below. Also, comment below your favorite part of this video, and I will see you next time. So, bye!